Hi, this is Kerry Artek with Wicked Stocks, bringing you the daily Apple report for Tuesday, December 5th, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the chart. Start with the big picture, work our way into the day itself. Just a reminder, first and foremost, big picture, long-term bullish above the mid-160s, 164.73 to 166.15. We settled above this channel structure in May, set off a long-term buy signal at 232.58 that I'm still anticipating. We did fall back to this area following the July high. It held nicely, as you can see, and just recently, several weeks ago, we settled above this descending channel top that is now at 183.76. So this is our early support. 183.76 represents a secondary buy signal above it and can be bought not only through the rest of the year, but through Q1, above which we should not only retest that 198.23 July all-time high over the next, 3 to 5 weeks or less. It all depends on whether we fall back to 183.76 and then resume the upward push, or whether we continue higher sooner than later. And I'll get to that right now. Continuing higher sooner than later would be a settlement today above 190.98. This is a formation that can contain session strength, and its channel base at 187.64 actually contained Monday's lows, can continue to contain selling pressures for the week, and above which 190.98 is likely over the next 1 to 3 days, depending on volatility. This is the swing trade, really, that we've been playing inside of for the last week or so. 187.64 I've got weighted as a 3-star support because of the buy signal, the secondary buy signal that still remains in effect above that 183.20 channel top on the daily chart, on the weekly chart at 183.76. But if we do close today, and this should be mentioned, below 187.64, a good high for the week, we should then, by the end of next week, quite possibly over the next 3 to 5 days, continue south into this 183.20 to 183.76 area, where a buy opportunity would present not only for a day, not only for a week, but even through the rest of the year, because above which 198.23 is likely over the coming weeks. Now, as I mentioned a moment ago, that 198.23 high, which you can see here, I'm going to give that a 1 to 2 week target. Better part of 2 weeks likely. If we close today above 190.98, we could, by the end of this week, I think it'd take a little longer to reach that 196.45 high settlement price. That is an all-time high settlement price on the daily chart. 198.23 is right behind it, within a day or two of it. In fact, I've been mentioning how you could, if you're kind of a big picture 3 to 5 week swing trader, consider 196.45 to really be the beginning of a range of resistance up to 198.23 that can contain buying, I'll say on a weekly basis, double top material, potentially into January trade. But keep in mind, we're bullish on several counts. Longer term above the mid 160s long-term support, and secondarily so above 183.76. So I wouldn't get too, attached to selling 198.23 aggressively unless you're already long and taking profits there. There's nothing wrong with taking profits, but in terms of playing the short side, I would keep the stop fairly tight I wouldn't let this market run too far ahead or beyond 198.23 before reversing and going long to 217.99. Closing above 198.23, we're probably just another 2 to 3 months away from reaching 217.99, which is rising at a pretty fast pace and will actually, over the next, several months, 3 to 5 months, converge anyway with this longer term objective at 232.58. Back to the day itself. Actually, let me just mention that if we do, I'm going to say close above 190.98, then this former channel bottom at 193.99 is likely within a couple of days. And as I mentioned earlier, the 196.45 high settlement price by the end of next week or sooner, really the beginning of a range of resistance up to 193.23, 198.23 that can contain buying on a monthly, potentially, on a weekly, potentially monthly basis. Downside, I'll say it again, if we close below 187.64, no good reason to be long Apple if your time horizon is 3 to 5 day swing trading. You should be short, in my opinion, with a settlement below 187.64. And if you're talking 3 to 5 day swing trade to the upside, you could be bottom picking this right now. And then what you're waiting for then is a settlement subsequently above 190.98. If you're long now in the 3 to 5 day swing trade and we close above 190.98, hallelujah, 198.23, here we come. That's a nice trade. A full 12-point move from the 187.64 channel bottom to the 198.23 July high. And if we, once again, last time I'm going to say it, closing below 187.64, expect the 183 handle within a full week of activity where we could bottom out through the rest of the year and quite possibly through all of Q1. I'm going to leave you with this image for the day. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back tomorrow with Wednesday's Apple report, and you have a great day.